curious to see what the level
This
of
meeting
interest
is being recorded.
questions is for accounting and bookkeeping.
Same. I mean, last time it was, well, I feel like we could have gone on for 2 hours.
Well, yeah. People always want to talk about taxes.
Taxes that way.
Let me see. Where's the link for this thing? I wanna. Weird. Meeting info. All right, cool. We'll let people trickle in. How you two been?
Good.
Good.
Very good. Very busy.
I feel that.
How is Hey Council doing?
It's good. Slowly growing, slowly expanding our offerings. Working on a couple bigger projects that I think will be exciting for everybody. But yeah, I mean, I think you both get it. We're all entrepreneurs. It's stressful.
I have no idea what you mean.
How's have you guys been expanding your team, or how's everything going on that front?
Yeah, we have. We brought on a new accounting manager about a month ago. We have an operations manager starting on Monday, and we are diligently interviewing for a tax senior / tax manager. So if you know anybody in tax who looking for something new, let us know.
I'll keep my eye out. I don't know off the top of my head. I only know lawyers. I have no room for anything else right now.
as we would expect. Yeah, but we're definitely growing the team. We probably need 1 or 2 folks on our offshore team to kind of round that area out. But our recent hires have been here in the States.
Nice.
Expanding our tech stack. We're leaving one platform to onboard to a new one, only to find out that the one we're leaving is now trying to introduce all the features that are in the new one to compete. Like, well, maybe we don't leave it all. Hello, Miss Kimberly.
That's what are the platforms you're moving to, or what are you moving off and what are you moving to?
Yeah, there's an accounting platform called TaxDome, which has been our portal for years, and we're potentially moving our accounting clients to something called Keeper app, which is much more accounting month-end closed focused. We have a meeting with them this evening, actually, as part of our onboarding. So
fun.
Yeah.
Yeah, that operational stuff can just be such a headache because they always make it seem easier to set up than it actually is. But yeah. Well, good luck with that decision.
Thank you. Thank you. I didn't anticipate questioning it as we're transitioning into it, but we'll see what happens.
Yeah. Cool. Well, thanks for joining. I think we can get started at this point. We have a decent amount of folks, and I'm sure some people will jump in. We definitely don't need to take the full hour. We can just go until people run out of questions. But I'll do just a really quick intro, or do you two want to just do a quick reintroduction to the group for everyone joining? Hey, this meeting from the Hey Council side, we did something similar a quarter ago. Speaking, mostly it was kind of like end of year tax Q&A. Had a bunch of people on from the community, kind of rapid fire questioning Allison and Sarah, and they were just the best tag team duo I've ever seen do something like this. So yeah, wanted to bring them back on, and we'll probably do this on a quarterly basis. The topic might shift every now and then, but they're just a great resource. So I'll let them introduce themselves, and then we can just kick it to the group to start the Q&A.
Thank you, Brian. That's super nice of you. So I'm Allison McLeod. This is my business partner, Sarah Harris. We are accountants, tax advisors, financial planners, co-owners, co-runners of Agate CPA. We help attorneys and a few others run their firms, hopefully better, hopefully easier. We have accounting services, tax planning strategy, and compliance services. And we also help set up retirement accounts like 401ks and SEP IRAs. We're very excited to be part of the Hay Council family. We love helping entrepreneurs figure out how to not go down bad roads. And we love to be part of that and happy to be a resource for everybody here on this call and all the other members of Hay Council. So we are happy to answer any and all questions you have. Sometimes that answer might be, I don't know. So we might have to do a little bit of research for you, but we're absolutely thrilled to do that too. Last time we talked about taxes. We are still open to talk about taxes. I know the purpose here is to talk maybe more about the accounting and bookkeeping side of your firms, but that other items are still on the table and we're happy to answer as we can. Anybody would like to go first?
I'll go ahead and do it. I'm not shy. Hi.
Love it.
My question might be dumb, or too rudimentary, but I think for me, who's running a smaller shop, and a solo shop, I'm really struggling with separation between my expenses, business expenses, where it gets muddied. And, again, because it's smaller and newer in me, I haven't invested yet in just all these tools because I'm also working in tech as long as I do. I also don't just immediately go and get a bunch of tools. I kind of make do as long as I can with all the free stuff and basic stuff until I know exactly what features I need. So I'm also basically tracking everything on my own, but I'm realizing, I get everything paid into my Mercury account, but then I'm quickly dumping it all into my personal to pay. Yeah, I think just good practices while it's still small enough that everything's sort of getting commingled, or should I just cut it out and stop commingling? For what it's worth, I have no trust accounts because I just do fractional GC work. So to clarify, there are certain legal implications that I don't, fortunately, and also by design, have to deal with.
Not having to worry about trust accounting is definitely a plus. That will make everything easier. And I think what you'll find is, well, let me ask you, you said you have Mercury. This is for your business accounts, right?
Yeah.
Okay. Do you just have one, like just a general operating account with Mercury?
Mm-hmm.
Do you have a credit card for your firm?
I do, and I don't use it. I just keep using the same. And then comes accounting, I'm sitting there going line by line trying to pull out what were me expenses and whatnot because candidly, I just want to get all the points.
Understood. I would say that's probably one step for you is to go ahead and start using your business credit card for business expenses, which I know is hard because it's either an in-person activity like going out, taking a prospect out to lunch or something, and you throw down a card. So it's like pulling a different card. Or what's even harder is once you set up a recurring charge and it's just pinging you every month. Well, now you have to actually log in and you have to change it out. But I would say that would be one homework item that will really help a lot. I guess the other question I have is, what does your accounting system look like? Do you have an accounting package like QuickBooks or Xero? Are you keeping up with things in an Excel spreadsheet?
Yep, Excel spreadsheet.
There's really
Yep.
nothing wrong. Oh, go ahead, sorry.
Okay, I was like Excel spreadsheet, and unfortunately haven't been able to find. So I just keep having year over year duds with accountant. So I haven't been able to find a good groove and support because I haven't been able to land with someone in the past few years well.
Okay, that's frustrating. That's sad. I totally understand. And you do QuickBooks or Xero or any of these accounting platforms will tell you, we're here for the DIY business owner. That's garbage. That's not true. You really do have to have some help to really run those platforms appropriately. And so you're defaulting to, well, I know I can run Excel, right? So I totally get where you're coming from. Ideally, if you have a good partner on that, they're helping you run the QuickBooks file or Xero file or however your accounting is done. We use QuickBooks, but different firms will use different platforms. And then that's part of that help, right? Because then that platform is going to talk directly to your bank account at Mercury and your credit card, wherever that is. And it's going to pull in that activity, and you can, at least if not abandon your Excel file, you can decrease your dependency on it because your business transactions are in a more appropriate location. What I think you'll find is that you'll still have one-offs where maybe you're paying for something personally that might be either fully or partially deductible. So there might still be some reasons to keep up with that somehow. Excel is probably not a bad place for that. But ideally, the bulk of your firm's transactions, firm's activity are going to be inside that accounting platform.
Okay. Yeah. I think it's the fact that there's so much overlap, but okay. I will.
Do you want to give us an example of like that overlap?
Yeah, I mean, right, because I work from home, so internet, phone, rent, right? All the basic expenses. Yeah, probably. Those are probably all my main expenses.
Yep. Is it just you on your phone plan, or is anybody else on your? Yeah. Okay, so here's my 2 cents for how I would do that. Rent is obviously overwhelmingly a personal expense. I would continue to pay that personally, and then you could take a home office deduction. I presume you can. That's a whole nother conversation. But presumably, you could take a home office deduction, and then you want a way to allocate your business versus personal use of your home. So again, Excel can help with that. We have tools to help our clients with that. Then the internet and cell phone, you will hear different people say different things. My overwhelming thought on that is these are small expenses that when you're a business owner, especially working from home or predominantly business, so I personally don't see a problem with the business paying for those. Let the IRS come get me maybe. But if you want to continue paying for those personally, then again, those would be a nice thing to track in Excel. And then those can be part of your tax return outside of maybe what's in your books and records.
Okay. I won't take any more time. I know there's plenty of folks here with other questions. The other, and I don't know if this is what you guys touch on, I already have it on my list to talk to Kim about this later, but just kind of try and find that sweet spot as well for figuring out goals in accounting when it comes to how you bill and charge, and should I be going up or down, and all of that. So figuring out a good way for that will also be helpful, but I know that's a much bigger conversation. So
Kimberly is a wonderful person to ask those questions to, actually. Yes.
yes.
But I can assure you, like, trying to segregate business from personal expenses, how do you keep track of things? These are questions everybody has. Everybody has these. So no, appreciate you bringing them up. I think we have somebody in the chat. I have a good spreadsheet for home office deduction I can share. Oh, that's Brian. Yes, absolutely.
Yeah.
Share your spreadsheet, Brian.
Yeah, I'll share it. I'll drop it in our one of these channels. I'll send it along.
Thank you.
It does the math for you. That's why I like it.
It's my favorite.
Can you summarize the rules for deducting meals? Sure. We can talk a little bit about meals. Maybe a question for everybody if you want to come on and say, or if you want to pop in the chat. But can you tell us a little bit more about like situations around meals for your firm?
Yeah, sorry, I'm making lunch while I'm listening in. So I'm about as small as it gets. I don't have an entity or anything. And so there's two kinds of meals, I guess. One where I'm meeting with somebody who's a potential referral source, or the purpose of the meeting is like where I'm meeting with somebody. And then so I pick up the tab. And I guess the subgroup of that is where we actually split it, right? So I wouldn't be having that meal were it not for meeting with that person. And then I'm either covering the entire meal, and if it's a potential client or a referral source, and I'm finding, and it's pretty easy to point to business value in doing that, or there's still business value in meeting with the person, and just for whatever reason, I'm only covering my half. Or it's group of 3 people, and I'm only covering sort of my portion of the meal in some rational sort of calculation. And then the other bucket I would say is like maybe I'm on a what I would call a work trip. So I might be visiting family, but then I'm taking business meetings, and this happens all the time. I try to take business meetings everywhere I go, and those could be with potential clients or referral sources. And then I'm out and about, and maybe I'm eating on my own, but it's on the way to traveling somewhere, or I don't know, I'm traveling for work, and then I'm taking a meal that I otherwise wouldn't were it not for that work trip. And so those are the sort of buckets that I'm curious about. I understand. I think you can only take like 50% of the cost in certain circumstances, and then maybe 100% in others. And that's what I'm sort of curious about. Thank you.
Yeah, for sure. Thanks, Dan. Thank you for interrupting your lunch. If anyone has any other thoughts while I'm chatting about like meals, anything like that, you want to pop them in the chat, like for your specific situation, feel free to do that. So yeah, so meals are kind of an interesting area of tax rules because there's a presumption that no matter what, you have to eat. So with some exceptions, they are typically not 100% deductible. Kimberly just put an exception into the chat. Thank you, Kimberly. And typically, though, you'll find they are 50% deductible. And that 50% falls into a couple of categories, and Neil actually mentioned both. So one is out-of-town travel. So if you're traveling, if you're on the road for CLE, or you're on the road to maybe go visit an out-of-town client, you're at the airport, you're at your hotel, etc. If you need to eat, typically those will be 50% deductible. 50% deductible also include local meals if it's for a business purpose. So maybe it's a prospective client, it's a center of influence, somebody like that. Neil had a little twist of, hey, what if I'm covering the entire table versus what if I'm covering just me? Not relevant. It does change the amount, but it won't change the deductibility, so it'll be 50% either way. And then there's 0% deductible. So if it's really just personal, and that's, I think Neil was mentioning that too. Sometimes it's maybe just me just going out, and I'm somewhere local. I'm by myself, so I'm not necessarily trying to drum up business with anybody. Likely that's just going to be personal meal, 0%. But I'll talk a little bit about what Kimberly put in the chat because that's a really good one. A lot of times meals, like if you have a holiday party or if you're just asking your team to stay a little bit later and bringing that in, if you have an office, then those typically are 100% deductible. And what we like to do for our clients is we actually have 2 different accounts on their chart of accounts in their accounting package. And so we try to code those transactions on the front end so that as you're doing tax planning during the year or it comes time to do your tax return, it's very easy to spot any meals that might be 100% deductible versus those that are 50% deductible and they're already broken out. That was a good question. Is there any residual questions? You're welcome. Any residual questions on meals or any other nuances to throw into that? All right, next question.
Are you still recommending QuickBooks after their latest price increase announcement?
Oh my goodness. Okay, this is actually a really good question, and it's definitely accounting related. Thank you, Kimberly. If y'all can't tell, we're very dear friends with Kimberly. So this is actually a really good question. This is a foundational question for your firm. Is what accounting package do you use? Because once you decide it's time to graduate from Excel or pencil and paper, the accounting package you choose does matter. You can choose an accounting package that's built into your practice management platform. There are several of these. Some are legacy like Cosmolex, some are a little bit more recent, like Clio. You get what you get. You probably will not find a lot of external accountants who know how to help you with that. So it will be something you'll either need to run internally or just accept that sometimes you will have issues with that accounting feature inside your practice management platform, and it will just be what it is. You won't really be able to get a resolution. So then you also have these external packages like a QuickBooks or a Xero. That's Xero with an X. There are a few others, but really those are the two that anybody would recommend to you. They're really effectively the only players in the accounting package game. And the reason is because of these ecosystems that have been built around them over the years, these integrations with other platforms. So let's say you run payroll through ADP or Gusto. Those platforms will integrate with a QuickBooks or maybe Xero. I don't know Xero as well. They're not going to integrate with, say, Clio's accounting package, and they probably never will. So now you're at a point where if you want to have more sophisticated activities going on inside your accounting platform, like integrations with your retirement plan or your insurance or payroll, etc., you're going to need to be at a QuickBooks or a Xero level. We do not love Intuit. Intuit owns QuickBooks. They are, in my opinion, anti-small business. They're definitely anti-accountants. But we choose QuickBooks and we go with QuickBooks because it will do a lot for our clients because of that ecosystem. There's so much our clients need that we can make happen in a QuickBooks that we could not make happen elsewhere. Secondly, these platforms get to be very, very sophisticated, and it's not just the ecosystems in which they are in, it's just the platform itself tends to be sophisticated. And we have just taken the position we do not need to learn a brand new accounting platform every time a client comes on board. We need some consistency in how we do things. So that is a very long answer to Kimberly's very quick question. So my answer is yes, we do still recommend QuickBooks and probably will for the foreseeable future.
And I'll add, QuickBooks has a nice simple start package that's still relatively inexpensive. So if you're a solo or as you're starting a firm, it's still a good option. I think it's $35 a month, so still affordable and still gives you access to pretty much everything inside of QuickBooks that you would need. And then it will allow to scale as you grow. And so if you need more services down the road, you can integrate that and move up in plans if needed.
That was actually a really good question. Yeah. Other questions?
I'll piggyback real quickly on that because I have a kind of unique situation where I essentially get paid out as a 1099 right now, working potentially on changing that, but it's way simpler right now for me to get paid that way for the work I do for a very small firm. And the firm has their own accounting and QuickBooks and all that stuff, but I personally don't. I always thought it would be simple because I would get my pay stub. And then I actually do have a credit card that I use solely for business. And then I have my spreadsheets. So I think that I have pretty good data and accounting hygiene, but I don't have like a QuickBooks. I do use just Excel, and I even, I categorize my expenses and all that stuff. This is the first year I think my bookkeeper or my accountant, because I actually have a bookkeeper, but basically said, you need something, like, please. So I think I'm going to use QuickBooks for this, but like, does that align with your thinking here? Like, it makes sense at this point to just, even though things should in theory be simple, that it still makes sense somehow to have a QuickBooks just be the central for my personal non-entity bookkeeping as a 1099. Okay.
Probably, yeah. I would say if there is if the person, say, who prepares your taxes is looking for an extra bit of help, like you say, well, I have this Excel file or I have this, whatever, and they're like, yeah, I don't really know what to do with this. Probably, a QuickBooks or something similar would be really helpful for that relationship and give them what they need, especially if you want to do some kind of tax planning with them during the year. That's helpful. Yeah, it can otherwise be hard to know when it's like time to make that upgrade. But if your advisors are asking for it, I very selfishly would say, yeah, it's probably time for that upgrade to happen. And to your point, Brian, and we see this with our clients. Like we have some clients who they may not be a partner in the operating firm, but instead they own their interest in the operating firm through an entity in the middle. Maybe they've made it an S corp or something similar, and yet you think, oh well, I don't have to worry about all that. I just have my ownership via this S corp. But to your point, there's still some level of income coming in from the operating firm. There's still some level of expenses that are not going up to that main operating entity. And so we do have some of those folks that are monthly accounting clients. We keep up with that activity on a monthly basis because it's significant enough. So even though maybe the structure itself makes it sound like, well, this shouldn't be needed, there's just enough transactions and enough confusion about the transactions if they're old, like trying to remember in June what you did in January might just be impossible.
Yeah.
And so keeping up with it regularly is helpful, and a good place for that is an accounting package.
Yeah. Fair enough.
Also, you can tie your credit card and your bank account to it, so you don't actually have to manually enter the stuff on your spreadsheet.
Yeah.
It's less work for you.
100%. That's actually a very good benefit. Yeah, QuickBooks, Xero, those will like directly connect to nearly any bank or credit card account and just pull it in, and then you categorize from there as opposed to like typing it in. Good point. I take that for granted. What other questions do we have?
I'm pulling some stuff from some mutual clients that we have. Issues that I've seen that other people are probably interested is charitable and political donations. You want to talk about how those are handled?
Sure, we can absolutely do that. So political donations are not deductible. It's fine to make them. Not deductible. So when we have clients that do that, again, we're always thinking about the tax implication, even if we're not preparing tax returns for a client we're doing the accounting for. So we actually have an account labeled political contributions. We put them there so it's very obvious. Again, it may be a friend of yours that's running for office and you want to give a few $100s, something like that. Totally fine. But we do keep those segregated on the P&L. Charitable giving is maybe a little bit more interesting. Charitable contributions that you make through your firm potentially are deductible on your personal tax return if you itemize on Schedule A. Having them paid at your firm level versus your personal level doesn't make a difference. They still get deducted in the same place. But maybe you take the standard deduction, you don't itemize. Or maybe you have a situation conversely where your charitable giving is just so astronomical that your charitable contributions are somewhat limited against your income because that's the way tax rules work. So again, if you have any charitable inclinations that you want to run through your firm, absolutely do. But what we like to consider with clients is that actually charitable giving? Sometimes it is, like our own firm has a charitable giving policy and there's a certain amount and we do certain things. But sometimes we're paying for a sponsorship, right? The entity itself might be a charitable organization. For instance, we sponsor the Georgia Lawyers for the Arts Gala every year. We pay money to a nonprofit to have our logo splashed about during the gala for some recognition. So for us, yes, it's going to a charitable organization, but for us, that is marketing. And marketing is going to be typically a better deduction for you because if you are paying self-employment taxes on your profit, like if you are a Schedule C sole proprietor or single member LLC or partnership, that reduces your self-employment taxes. There's a few other benefits of sponsorships / marketing over charitable giving. So again, sometimes you are just giving somebody, there's no expectation that that organization is going to give you anything back in return. That's truly charitable giving, coded that way. But if there is an opportunity to turn that payment into a tax benefit that's a little bit better for you, we absolutely recommend doing that. And again, it sounds very boring, but it's just coding it to a different account on your P&L so that whoever's preparing your tax return can get that better benefit for you. It's so funny. I'm glad you're bringing up all these, Kimberly, because they all have tax implications, because so many different types of transactions and activities that we go through have different tax treatments. And the very boring way to make sure that that gets done right is just good record keeping. Yeah, that's a good one. I didn't tell anybody this, but we paid Kimberly a little bit before this meeting so that she would ask questions. It's going great, Kimberly.
You're welcome.
I'm just shocked at how many people know Kimberly. Every time I'm on some sort of group chat or something like this, everyone is friends with Kimberly.
I'd rather network than work.
I love that. Same. That's why I created a network. There is one question that I'm just going to pull from like the Hey Council chat. Oh, Shaz, do you want to go?
Yeah, I just have, I apologize, right? I'm just catching myself after this workout. Sorry, came in rough. But as I heard the other questions, I was thinking about this. So membership of like a private club, right? Where it's where you can host. It's also advantageous to be a member because it's how you meet people and have conversations. So what does that look like? I mean, I think I understand. I think on paper, it's just a no, but depending on the accountant you talk to, in my experience, sometimes yes, sometimes no, what's tax deductible. So just really, what does that look like? And I guess adding the caveat as a lawyer, what's on paper, and then what's actually done that everyone just does.
This is a really, really good question. Neil, were you coming on to?
Yeah, actually, so I just got back from my college reunions, and it was like, I don't know, 18 hours of activities, including imbibing various beverages, and and one might look at, and I want to piggyback because it's not that different than the gym. Like, you might go to the gym if there were no clients there or potential clients or referral sources. And I might go to my college reunions and fly across the country if there were no referral sources, but I fully expected to go there, talking up my business. And in fact, that's exactly what happened. I may even get some clients from there. It just happened this past weekend. And I would love to deduct as much as possible from that trip because there's a lot of money, including what I paid my university and what I paid for transportation, both local and airfare. So I wanted to just piggyback because I think there may be an answer to both that's similar. Thank you.
Yeah. These are good questions. Before I kind of start into an answer, does anyone want to add anything on to those questions? Okay. So essentially, we're talking about two types of activities. One is dues, membership dues, and one is travel. So we'll talk about membership dues first because that was what was asked first. So some groups are inherently business. A chamber of commerce, the bar. There's some where it's just we are there because we are giving referrals, getting referrals, learning about our profession, etc. Those dues are going to be typically 100% tax deductible. Anything else that is primarily a personal element. So I know this is the part where somebody starts throwing stuff at the monitor. So our fraternities and sororities, our high school reunions. What would be some other good examples? Just a city club or a country club. Even if we get business there, those types of groups are inherently personal, and so those dues are 0% deductible. Now, that doesn't mean some people do still run those through their business that's maybe another story. But again, for us, if we see those, we split those out into a separate account, do 0% deductible, and then it's just obvious. Whether or not you pay them for the business is another story. I probably would caution you not to, but the dues themselves are going to be deductible. Another aspect of those dues, though, so the dues themselves to like a social club, fraternity, et cetera, are not deductible. But then there's activities, right? You go and you participate. So what do you do there? It could be a sponsorship, right? You get your name splashed about at a big event. That's probably actually 100% deductible. Maybe the dues to your fraternity are not going to be tax deductible for your firm, but if you are promoting your firm and looking to get business at a certain event, that might be 100% deductible. If you're going out and having drinks, and you, with a primary purpose of chatting about business, and you chat about business, that's 50% deductible. So now you're kind of back into like meals and sponsorship territory. So these activities sort of overlap from a tax perspective. Travel is a little bit tricky as well. It's inherently personal, unless the only reason you're going is for business. So, which again, that can be kind of open. Let's say I'm going for CLE, but CLE is 1 day in Rome, Italy, and I'm going to be there for 2 weeks. Is my entire trip to Rome tax deductible? No. So loving the visuals on this. So yes, tax deductible, not tax deductible. I get it. So if you're going to high school reunion, your purpose is to see friends, to hang out. Yes, it does. I love the chat. Then that's a personal trip. Travel's personal, etc. But I would allow for some flexibility once you start. Oh, these people have some money now. These people need some help now. I think I'm actually really having a conversation about some prospecting, right? Then I wouldn't hesitate to say like, hey, let's we're all going to go over here. I'm gonna buy us all a round of drinks. I would deduct that. It's 50%, but I would absolutely run it through the firm. Now, if you just wanted to err on the side of caution, you ran it through personal, I think that's just fine. But I don't see any concern with a personal trip ends up having some element of business, and then you take either 0 or, well, not 0, but 50% or 100% deduction for that element of business as it happens.
You want to talk about the deductibility of domestic versus international travel while we're talking about travel?
We can talk about that a little bit. Anybody here going for international CLE?
I might, depending on how this conversation goes.
Yeah, that's kind of an interesting area. Once you travel inside the U.S. is one thing, travel outside the U.S. is another. Again, any type of activity that has some personal element is going to have additional scrutiny from a tax deduction perspective. And once you leave the country, it really gets even stronger. So there's more of a breakdown between what's personal and what's business. So for instance, let's go back to Rome. Let's go for 2 weeks. Let's go to CLE. Like if the primary purpose is personal and you're just giving some CLE in, it's likely that the travel itself, like the hotel stay and the flight, is either going to be entirely not deductible, or maybe we can take like 1 day out of 14 and make that deductible. But I wouldn't look to do travel CLE abroad as some big tax benefit. Now, on the other hand, maybe it's 5 days in Rome and 5 days of CLE. That's a different take, right? You have to be there that long. Now, I personally would want to go for longer if I'm already going there, and so most people will, and so the IRS knows this, tax rules know this, so that hence why there's kind of that breakdown. If nothing else, you still get a tax deduction for the program itself, right? CLE is probably not for free, so you have some cost there, and that would be run through the firm too. You're probably going to bring your family, somebody you care about, because it's going to be.
They don't need to go to Italy.
But if they did, probably not deductible, unless of course your spouse is, again, if it's CLE and your spouse is also an attorney, and your spouse or boyfriend, girlfriend, whoever, friend, whatever, then potentially, but most likely probably not deductible for them either. So don't not have some really big opportunity present itself to travel abroad and learn or go visit a client or something like that. Just know that there's likely some, if not a majority of the component of that probably is not going to be a big tax benefit for you.
The obvious question, but just to clarify, this counts for general conferences or anything. It doesn't have to be CLE, right? The same rule would apply if we can just say there's a business purpose advantage or something.
Yeah, I think so. When we think about whether a expense is tax deduction or not, the we're talking about travel and meal, whatever, but underlying pretty much every type of tax deduction is whether it's what the Internal Revenue calls ordinary and necessary. And so really, before you even get to any other type of rules, then the question is it ordinary and necessary for a U.S. attorney to travel abroad for random training? Right, like if it's CLE put on by somebody that's authorized to do continuing education credits, then maybe I can make that case that, well, I can't get this training unless I go there, and I have to meet my credits. If it's just general training, I think that presumption is a little bit more that it's probably personal. So again, I don't know that I would have a hard time deducting some, at least, of that travel, but there's just a little bit more exposure there, I would say. I'm loving these questions. This is fun. Can I just do this all day?
Yes.
Don't tell her that, Brian.
What other questions might we have?
Any more from the group? We only have them for this hour. And then we got to wait another 3 months maybe.
What's your favorite payroll processor?
Honestly, for our clients that are in QuickBooks, we don't actually hate QuickBooks if it's just a couple of folks. Everybody seems to want to use Gusto, but I think that's more marketing than anything. I don't hate Gusto, but well, I don't love it. I don't love it. But I think it's fairly user friendly. But I think if you're in QuickBooks, why not just use QuickBooks Payroll? It actually does a good job of that. And don't discount a PEO either. And then you don't have to worry about it at all. I don't know, Sarah, do you have a favorite payroll processor?
The lesser of all the evils, no. I mean, I think QuickBooks does a good job for what it does. What we see with people that use Gusto or ADP or Rippling or any of those is that unless the integration is set up correctly, what comes over into your QuickBooks isn't correct. And so we'll see, we're doing tax planning with the client and it nets their payroll instead of grosses it. So they're potentially losing some deductions because their payroll is not done correctly. QuickBooks, does that right on the front end. And a lot of times our clients don't realize there's an integration that needs to be done. So by the time they come to us, their payroll's been running for, months or a year and it's not correct. And, we have to go back and fix that and tie everything out. So QuickBooks works well if you're using QuickBooks. If you're not using QuickBooks, I think they're all about the same. Gusto, Rippling, ADP, Paychex. It's just
Don't use ADP.
Just make sure you know what you're doing if you're using one of those, Gusto or Rippling, because it's all up to you what's done inside there.
Yeah, I'll add on to what Sarah's saying because I know she's heading in this direction. These are platforms. They're not providers. They're not advisors. Saying we'll ask someone, who do you use for payroll, and they'll say, well, Gusto handles my payroll. No, it doesn't. Gusto doesn't run your payroll any more than QuickBooks runs your accounting. So, and I think a lot of these platforms don't advertise themselves properly. and they maybe overpromise a bit, and everything is fine until it's not fine and you don't have a person that will help you. So I would say just, keep that in mind as you use those. They are platforms, not advisors. Keep hearing about Zoho more and more. Any thoughts there? Zoho for like practice management or Zoho for accounting, payroll? I know it's kind of like a big platform that does a lot.
I was going to say, I mean, literally everything. I feel like any question I ask these days, someone's like Zoho. But I have been surprisingly hearing about them a lot for accounting, payroll management, kind of bookkeeping, all of that. I think for me, my concern, aside from it being a newer name to me, is it seems to be, I just worry if it's so customizable and adaptable, how helpful would it be working with accountants and bookkeepers, or is that actually really good? So I just didn't know if you all have thoughts or experience with it. Yeah.
Yeah, there's like a platform for everything, and there's a million of those platforms for everything. I don't personally think I have Zoho experience to speak on that. Sarah, do you?
We have 1 or 2 clients that use it for their accounting platform. I can't really say anything good or bad about it. It's not as, it doesn't seem as robust as a QuickBooks, and it seems like you have to do a lot of the setup on the inside. But I do think they're trying to build out one ecosystem between their project management and accounting and payroll that can all talk to each other and integrate and work well. So it may be something to keep an eye on.
I had a question for you on S corps. How do you view the salary requirements there? What, like, how should I be thinking about that? Because I like some of the national average numbers. Very much prefer some of them that are not in my cost of living area. But yeah, I'm just kind of curious. Like, I want to minimize audit risk, obviously, but don't want to pay myself too much through payroll.
Mm-hmm. Yeah. My biggest, easiest advice is just don't be cute. Just pick a number that is reasonable and based on what you would need to pay somebody to do the job you're doing, and be done with it. There's certainly more you could do around it. You could optimize for a maximum retirement plan contribution. You can consider how it impacts your qualified business income deduction if you're under thresholds to meet that. But I think a lot of people spend a lot of time trying to chase after the one number, and then their salary changes all the time, and a lot of up and down, a lot of hemming and hawing. And honestly, I would just say set it and kind of forget it until the next year and redo it. We use a platform that calculates this. Well, we have been using a platform, and I tell you, they are increasing their prices, so I'm not sure. But it's called RC Reports, Reasonable Comp Reports, and this is like all this platform does. I was just saying there's a platform for everything. There's like legitimately a platform that helps tax accountants calculate reasonable compensation for their S Corp and C Corp clients, which is wild. But they've actually been around for quite a while. And when they're looking, they'll run off of a few different ways, which is how the IRS might do it. But your geography does matter. So if you're in a very high cost of living area, and you're trying to pay yourself as if you were in a very low cost of living area, if the IRS were to audit you, they would look at that, right? They would be able to calculate that. So I don't know that I have anything very helpful to say on that other than what I have, but feel free to
Yeah.
ask us in the DMs later, Jeff.
Okay. Yeah. No, that was a very balanced response. I appreciate that. All right. One other question for you then. What are some of the biggest deductions that small business owners are missing? Like I'm constantly trying to find out, what are my blind spots with this, because this accounting stuff is all so new to me. So are there areas that you just like are constantly finding that founders are missing, maybe larger areas or larger opportunities to minimize tax liability?
Any industry or law firms particularly?
Law firm, services industries. For me, I'm not sure about others. I don't know what Brian's cooking up over there.
Let's law firms then, law firms like accounting firms, we typically have high margins. The expensive part of running our businesses, we already did. We went to school. It was really expensive, and we spent years working for other people for lower pay. It was really expensive, right? So, like by the time we start running our own firms, we typically have really good margins. Even if we're bringing on team members like of counsel or employees to help, our margins are really high. So there aren't really tons of tax incentives out there for us. If you look at something like a grocery store, manufacturing, something like that, where their expenses are super high relative to their revenue and their margins are very small, they might have local tax credits, and some place like software startups might have R&D credit because maybe they're running at a loss in advance. They can offset their payroll taxes, etc. But when you look at folks like us, there just typically aren't a lot. So I'll tell you a few things. One, this goes back to our conversation earlier. Keep good records. Like, I know that sounds really, really boring, but it is so, so very true. When we see folks not maintaining good records, they're losing expenses, really. And it will add up. So maybe one particular expense isn't that big, but it will add up. The second thing I will say is please don't buy something just to get a tax deduction. Please, please, please don't buy something just to get a tax deduction. And the third thing I will say on that, related to that, is keep in mind, it's just like travel or dues, like vehicle, for instance, your deductibility there is going to be limited to your business use. And I think a lot of people don't think about that when they are making purchases. Ha ha ha, thanks, Kimberly. It's like you're reading my mind. So, somebody says, well, I'll just buy this $100,000 car and I deduct $100,000 this year. Like, it really, literally does not work that way, despite what TikTok has told you. So with all that said, the biggest things that we can do, attorneys and accountants, for and other professional service providers for doing our tax liability, probably the biggest one is making a retirement plan contribution, if that's something that interests you. And nicely, those are one of the few things that presumably you're on cash basis for tax purposes, that you can actually take a deduction for in the year of, even if you don't make most or all of the retirement plan contribution until the next year. It kind of allows you a little bit of time to suss out your financial situation, but it's really like paying yourself now for the future. So it can be a really nice way to do that. I think we don't see enough of our clients take advantage of that. That would be one thing I would say. Probably some easy low-hanging fruit would be vehicle costs, to the extent you do have some that's legitimately business. Home office, I'd say most of the new clients we pick up have been taking home office deductions, but some just don't. They either haven't thought about it or it hasn't been brought up. You're not going to make tons of money off of a home office deduction, but it could be like, $1,000, $2,000 of tax per year gone. Like, why not? It doesn't require tons and tons of record keeping. And apparently Brian is the expert with his beautiful spreadsheet, so he can hook you up. Yeah, I would say those are the big ones. Sarah, are there any that you can think of where, like, here's the big tax savings?
No, I don't think there's any big ones, but I do think being mindful of like the charitable donations versus sponsorships. We see that a lot where there's opportunities to sponsor instead of it just being a charitable donation that can be an expense, you run through the business. But a big part of that goes back to keeping good records and making sure you're coding things properly.
I'll add, because I was helping a client with it, is if you're adding a new office, like a new location, we were able to get tax credits for bringing new jobs for like high income jobs, and by high income it's like $50,000. But to bring in that particular state where they had counties that didn't have a lot of economic development, so you can sometimes get state credits where federal credits aren't available, and they were like $100,000 over 2 years. Right, so that was a big one. The other thing is, if you're paying rent, consider buying a building. Right, then there's other tax benefits there.
Okay, that's really helpful. I appreciate it. And then any thoughts on hiring children?
How old are these children?
I prefer not to answer. Older than Brian's. No, he can walk. He's 5.
I have a feeling this one comes from TikTok University.
This one has come from a lot of different sources. It's one that obviously is like a little bit questionable from my point of view. But if I can put him to work doing things, and there's an opportunity to maybe minimize some tax burden, put some money away for him, cover his expenses, obviously I'm interested,
I'd say
but I don't want to increase audit risk.
it's another area to not be cute. Like, we certainly have clients who legitimately have their children or siblings or somebody close to them work in the business. Absolutely. It happens all the time. So, like, on its surface, there's really nothing wrong with that. It can be a nice tax benefit. So their labor, you put them on payroll, you give them a W-2, that will be tax deductible for you. And it may or may not be taxable to them, especially if they're younger and this is like the only job that they have. And maybe they earn $3,000 over the summer working with you. And now we can avoid federal and potentially even state taxes. There'll just be some payroll taxes. And then what can they do with that money? Well, they have earned income. Maybe now they have a Roth IRA that they can put some money into, right? Like, there can be really some good benefits around hiring your family. But that said, they need to work. They need to have a job. A 5-month-old cannot have a job except maybe a model. And putting them in your flyers or on your website is pretty sus. But if they're coming into your home office and they're shredding documents, or you can maybe get them to answer the phone, you can, like, whatever it is, if you can legitimately find work for them to do, and you want them to, right? Like, I've talked to clients before in the past about hiring their spouse, and they're like, I will never hire my spouse. It will never happen. I don't care how much tax money I can save, right? So, like, they need to legitimately do work, and you need to legitimately want them to do the work. And their pay needs to be commensurate with what they're actually doing. You cannot pay so you can do whatever you want. You probably don't want to pay somebody $50,000 to shred documents for 1 month over the summer. Like, that's just not going to make any sense. So I don't, on the surface, have an issue with it, but it does need to be legitimate.
That's super helpful. I appreciate it.
What about something like a horse or boat that draws attention to you, like market? How does that work about the horse? I want to understand how a horse draws attention to your firm.
Okay. Well, no, it's more, sometimes you see this, businesses will, like, in the elite jumping circles or elite dressage circles, the horse is clearly owned by, and so every time there's an announcement, kind of like a thing, like, now entering the arena, so and so, owned by blah blah blah. And like, one time I remember, like, a car dealership, like, so it was, Malibu Firestone sponsored the horse or whatever, or it was like a tire dealership. And I've seen a lot of, I did make this joke, this comment a little half in joke, but I've seen enough, like, being around horse shows, that I wonder if people aren't using things, or like, or a boat, when then you've got a competitive in the boat or car, like putting your name on a NASCAR, but like something just like that. Is there any kind of deduction or marketing or anything? Like, again, I'm not inclined to do it, but it just makes me wonder when I see people have high-end toys.
Yes. In this context, are you said owner of this horse or boat?
Well, like, I mean, yes.
I love this. I think this is a hypothetical discussion, but there's still a little hesitancy. Maybe we need to turn off the recording. I don't know. So let's talk about if you own the horse and if you don't own the horse. If you don't own the horse, I mean, it's pretty straightforward. This is marketing. This, Triple Crown winner sponsored by, I don't know, DLA or something. Like, but again, careful spending money just to get a deduction, right? That might be a very expensive horse to sponsor. And how much new business can you really get out of that? So I think your consideration with the horse or boat you don't own is probably more just about the financial outlay than the real tax benefit. The second option would be this is your own horse or your own boat, and that sounds more like you're using your business to fund a personal hobby. Now, we have to be really, really careful with self-dealing, or if you have like an entity in which the horse lives or an entity in which the boat lives, you have intercompany issues there. There's all kinds of tax rules about pushing money back and forth between related companies. So I think, on one hand, it's a question of do you want to serve, and then more about can you make sure if it's your horse, are you really just finding your hobby? And Sarah, just between you, me, and all these 9 people, I'm thinking about our colleague that has horses. Have a really interesting conversation when we hop off this call.
Yeah, IRS loves horse cases.
They do. They also love attorneys.
Yeah. Yeah. Well, there is that old saying, it's like a horse or a boat. What is it? It's just a hole in the ground you pour money into. Yeah.
That's not what I thought you were going to say. There's another saying about horses and boats. Any other questions?
I had a quick question. I'm glad Jeff brought up the S corp. First a comment what I've heard about figuring out reasonable compensation. Does it make sense? Somebody told me that he was an attorney and then he became CPA. That firms pay a third or 40% typically to their employees, that would be okay as a metric for running an S corp firm, that I could just pay myself a third of what revenue for that year would be. Does that seem to make sense? That way you at least have like a metric and you have something you can kind of rely on. And it's kind of what the industry does already. That's how they pay associates.
I feel like, I feel like a yes and no on that.
Okay.
No off the cuff, just because like a lot of people have these rules on like, oh, half your profits you get distributions, half to salary, and you're fine. But like when you actually look at like case law and stuff, that's really not necessarily how the IRS is looking at it. But to your point, that rule of thumb is ultimately what interest is to tax for you. Then if that rule of thumb kind of does become that industry standard. So in effect, you may be getting to what the IRS would probably look at as favorable. I would say still like do a reasonable comp study, do a little bit more of a research and analysis as to like your particular geography, your particular practice area, like what replacement costs would be to hire somebody in your place. I don't know if that's a horrible starting point though, where you have it. My only concern would be that at 40%, it might even just be too high, especially like if you have a really big year. Like if you do any kind of contingency work and you have a big case to pay out and, you're making $2 million this year, like I don't think you need a 40% of profit salary that year. Like you maybe need to adjust your salary because maybe that's what would happen if you were not an owner of your company and you had to pay an associate. But like I think you might actually get to a number that's just too high if you're trying to chase after changing profit.
Okay, yeah, that's helpful. The other question I had was somebody told me that because I know you can do like one payroll payout one time in the year and pay your is okay for an S corp to take distributions throughout the year though, and then do a one-time payroll at the end of the year and then sort of reconfigure it for the year, even though it is okay. It looks like you're nodding. That's good news.
Yeah.
It just sounds wrong to me because it seems like you're taking money out and not paying taxes on it and then doing the taxes at the end after the fact. So it just seems to be your take, but that's good to hear.
Yeah. Yeah, I will say it's wild to think that that's cool. And
Okay.
you might have a particular IRS examiner who looks through the details and doesn't like it. But when you look at the rules, like withholding and salary are deemed to be done throughout the year, even if it happens on December 31st. So you should be okay. My concern would be more of a practical one. You're taking all these
Yeah.
distributions. You better have the cash flow to make this happen on December 31st. You got to real
Right.
well. So I
Right.
don't know
Right.
that I would recommend it from a practical perspective, but I don't see it as a problem just from like a tax deductibility perspective.
Okay. Yeah. And the reason why I'm thinking about doing it is I'm really honest with them. Like, I don't really know how to do like quarterly taxes, or like I have no idea what my revenue could be. Half of last year, it could be double last year. Just kind of depends on how the year goes. And I don't plan on taking out big distributions and just being like, oh yeah, this is going to be a great year, and just hanging out if I do it, and sort of banking on taking out larger ones at the end of the year, and being really conservative until I get there, and then maybe doing it at the end. That's kind of what I'm thinking. I want to make sure it was like legit. It wasn't sort of a big red flag, get audited right away. So, well, thank you.
Yeah, for sure. Any other questions?
I got to follow up to that. How does that square with like the requirement to pay estimated tax? Like, is there sort of like is it where if you're a sole proprietor, you have to pay estimated tax? You can almost get out of that by doing what Ethan is describing, which is you set up an entity to pay yourself, and then your personal income tax, you don't have to pay for the and they're on that um, on that W-2 income.
Yeah, for sure. For sure. So it works sometimes. Firstly, you gotta make the tax completely. Secondly, you can at a certain level, right? Because what's going to happen is your income goes up, you more stuff, and certainly your salary is just so high compared to the profits of your company. Like you're not getting any of this taxing at first. So you find where your salary should be, you keep it at that. You can have all of that withheld if you want to, and if you still have taxes that need to be paid in on top of that, then that's probably where you look at estimates. So most of our clients will have estimates.
Estimated on behalf of the entity.
Potentially, if there's some kind of state level tax on the entity, like New York City has like this nuisance tax, but those are for your personal taxes that are based on the profits of the firm and other factors.
I guess I'm confused then. Like if you have an entity, whether it's an LLC or PC, and the law firms, and then you you're paying yourself like let's say every month or whatever. So I guess that's yeah. I guess it doesn't really maybe you have to pay yourself for 18 days. Whatever. And they're doing or is it if you're not doing income tax withholding and maybe you're just doing payroll? How does it all shake out?
Gotcha. No. But so you have a payroll run. You have like, let's just say you're in Florida and there's no state income tax. So you're in Florida and you have federal income taxes withheld from your paycheck, and those get remitted to the federal government. And you may also be making estimated tax payments in April, in June, in September, in January, before your tax payments.
Yeah. And you would be doing that as a way of trading on. Oh, interesting. Okay. Got it. And so I guess you could pay yourself bi-weekly or every 50 days and take home all of it, and then just simply make the estimated payment, including to cover payroll taxes quarterly.
Yeah, I would say if you're solo, if you're an S corp owner and you're your only employee, I just pay yourself once a month. It's a nice cadence, and most payroll service services are going to charge you every run. So I would just do it monthly. If you have a team, their employees, I would just go on whatever cadence they're on. So if it's every other week or twice a month or whatever, I would just follow them. And then you have withholdings done during that time. And like for our tax clients, we can help adjust those during the year so that we can help smooth out cash flow. But yeah, at some point you'll have to true up, right? Maybe it's April when you file that year's tax returns and you're like, oh, I just owed 50 grand. I would like to not have to write a check for 50 grand this coming year. So that maybe you can increase your withholdings, but maybe it makes more sense to start making estimated tax payments. Did that answer your question?
Yeah, it sounds like you can either, it sounds like you can either have it deducted from your paycheck, like a W-2 employee working for sort of whatever, some large company. You could pay it quarterly or however, kind of whenever you want and keep your whole paycheck every time it's cut. Or you can pay it at the end of the year. The thing that I'm confused about is I did this for 2023 and I ended up owing like penalties because I hadn't been making estimated payments. And I am a sole proprietor. And I guess what you're saying is that doesn't apply to a employee of an entity then. Like you don't have to pay the IRS periodically if you're an employee the way you would if you're a sole proprietor. Okay. That's interesting. I had no idea about that. And that makes no rational sense to me, but okay.
Welcome to taxes, tax law.
Yeah.
Not making sense since 1910.
Wow. Is there even a requirement then that you report at all during the year to the IRS? Like, can I just pay myself in cash and then declare it?
Sure.
Oh, wow.
It's like operationally challenging, but yes.
Sure. Okay. Got it. This is super educational. Thanks.
And
I did have another.
Oh,
go ahead.
Well, just along that line, if you pay out of the business to pay the taxes, you have to take that as a distribution to yourself, right? Because you're technically like you're paying it, and so it would be a distribution out of the business to you to pay it, right? Okay. It's not like a deduction or anything like that. It's just sort of like considered another distribution to you. Okay.
If you're an S corp, you have two options to get money out as an owner: salary and distributions.
Right. Okay.
If you're a sole proprietor, it's just distributions.
Okay, great.
I did have another question that I posted in the chat, but I think it got pushed up or down as the case may be. When it comes to home office deduction, I understand there's like a $1,500 option, which is the simplest, or you can do some square footage calculation that might result in something different. Can you just briefly describe that?
Yeah, absolutely. So there's basically a safe harbor minimum home office deduction. To get any home office deduction, you need to regularly and exclusively use a place in your home. Doesn't have to be a full room, but a place in your home for firm purposes. So personal use will taint it. So not your living room, not your kitchen, not your guest room, etc. But if you have like a home office, like I do here, then that's probably your spot. So there is a safe harbor to allow you to deduct it without necessarily having to keep track of all the utilities and mortgage payments, etc. I think that's not too onerous, but some folks are just like, just give me the minimum. I want something, but I don't have to do any extra record keeping. So it is $1,500. It's $5 times 300 square feet. So if you have more than 300 square feet of home office expense, it doesn't matter. You're just capped because that's what the safe harbor minimum gives you. If you want a little bit more deduction and you're entitled to more deduction, then that's when you look at your mortgage interest, your property taxes, or rent if you're renting, utilities, security, landscaping, repairs, etc. And you take a prorated portion of that total. And the numerator is your home office square footage and the denominator is your home level square footage. And you multiply that out. I don't know. Was that helpful?
You're on mute.
Yes. Yeah, that is what I thought it was. And I was advised to take the 1,500 last time with like some sort of big box tax repair. And I was just curious about that. I don't know what I'll do for 2024 since I still have not filed my taxes for 2024, but this is helpful. Thank you so much.
Yeah, for sure. Happy. Any other questions? We can
You
talk
see the
about
one I threw in the chat?
Oh, sorry. Thank you. Last question. What have you since on the tax used? But for the estates, want to explain pass-through entity taxes? I can. May take a few minutes. Maybe we save that one for the next round, Brian. Maybe we have one just about that one.
Let's hold that because you know, we need some material to kick off next time. So once we get rolling, though, it just never stops. Anyways, thanks so much, Allison, Sarah. This is always a hit and always super valuable. For anyone on the call right now, obviously they run the amazing shop Agate, and they work with small firm owners, and we have a bunch of Hey Council members who work with them, love them. So if you do need help with your accounting, bookkeeping, taxes, reach out to them, please. And yeah, thanks so much, team. You guys have been great again, and we'll run it back in a few months.
Thank you, Brian. Thank you, Hey Council team. We're delighted to be here. Please ask any questions anytime. We'll talk about taxes all day long.
All right. Thanks so much.
Thank you, guys.
Thank
Appreciate it.
y'all. Take care.